Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and very good evening. Okay, we just continue with the public policy. Okay, you just ignore the chapter 8. All right, so you just focus on the public policy. Whatever it is, you just refer on the cost information that I already given to you. Okay, all right. Okay, for this topic, we are going to discuss about the fiscal policy and the monetary policy. Economic functions of the government. Okay, for every country, all right, example, Malaysia country. Okay, so actually Malaysia country, we are apply on the mixed economy. Okay, mixed economy means there is a cooperation between governments and the private sector. Okay, but in this case, government will play the main role. Okay, and the private sector just support the government, support on what? Support on finance. Okay, all right, if you see the point that I give, all right, so the government will adjust the allocations of resources to alter the compositions of the domestic output. Okay, because as we know that resources was very limited, or we can say that it's a scarcity. Okay, so because of the government is a controller for the economy, so they have the task, okay, and they have to make sure that, okay, they adjust on the allocations of resources and make sure that we can fulfill the domestic output needs. Okay, next is the government will assist the private sector to ensure economic stabilizations by controlling unemployment and inflation, which caused by the business fluctuation. Okay, if we try to relate back, okay, now is what? It's a COVID-19. Okay, it's a COVID-19. When I asking you, okay, to find any articles that relate with the topic, and you say that why we have to relate with the COVID-19. Okay, for your information, okay, COVID-19 is not only happen in Malaysia, okay, but it's happened in out of the world. Okay, and Alhamdulillah, now Malaysia was recover. Okay, but what happened? We are moving to the recession economic recession. Okay, there's increasing in the unemployment rate, and in the same time, if you see a lots of rising in the cost of production, and also the price of goods and services immediately increase. All right, so even the government give a permission for the private sector, okay, to support the economy of Malaysia, but they have to exist, this private sector, and ensure that the economic stabilization by why we have to control the unemployment and inflation. If we go back to the objective of the macroeconomic, okay, this is not only the macro, the objective for the Malaysia country, okay, but actually it's a very general. Every country, okay, they have to control the unemployment, and they also have to control the inflation. Inflation is related with the rising of the price in goods and services, okay, and another one is unemployment. You as a government, you have to make sure that your unemployment rate is in the certain of percentage, not more than the percentage, okay, that guide you. All right, and then next, government will create a business environment, encourage competitions among producers. Okay, this is what the government do. Okay, they have to create a business environment. All right, they have to build an infrastructure. Okay, and then government will distribute income and wealth among population. Next, government will provide a legal framework and a social framework for the effective operations of an economy. Okay, all right, whatever we do, okay, there's a legal and also the social framework. Okay, so it's mean that the government control the economy by certain framework. Okay, next is a government revenue. As we know that the government is responsibility, all right, to provide the infrastructure, to provide the business surrounding or business environment. But where the government can receive, okay, a money, or we can say that is a government revenue to make that expenditure. So this is what we call government revenue. Okay, to make expenditure, to do a government expenditure, to expend some money for build the economy, so the government need a revenue. Okay, so this is a source of revenue. We have tax and non-tax. Okay, tax is a direct tax and indirect tax. Okay, direct tax means you cannot transfer the burden of tax to other people. Okay, and indirect tax is the tax that you can transfer to other people. Example, sales tax. Okay, and another tax is a non-tax revenue. This is include revenue from the license and permit, petroleum royalty, interest and return on investment, fees, and also the penalties. And the third part is a non-revenue receipt. This is what? This is include refunds of expenditure and receipt from the government agency. This is what I already explained. Direct tax is what and indirect tax is what. Huh? Okay, this is very important. You have to know that the structures, the tax, we have the structures of tax. Okay, we have progressive tax, we have proportional tax, and we have regressive tax. And these structures of tax for every country was different. Okay, all right. What is a progressive tax? Progressive means a tax for which the tax rate increase as income increase. It means that if your income or the individual income was increased, so they have to pay the tax more. Okay, and the proportional tax means a tax which the same rate. Okay, if your income 6,000, your tax rate is 10%. If your income 10,000, your tax rate still 10%. It means that it's a flat rate, it's the same rate. What is a regressive tax? Regressive means a tax for which the tax rate decrease as income increase. Example, if your income 10,000, okay, your income 10,000, your tax rate is 6%. But it's a contradict. If your income increase, so your taxes will decrease. That is a regressive tax. Next, if we have government revenue, we also have the government expenditure. What is a government expenditure? Okay, all right. So government expenditure as a general for every country, they must have the operating expenditure and also they must have the development expenditure. But this expenditure, they have their own character, they have their own objective. Okay, operating expenditure, they are focused on the expenditure that cover the operating and administrating expenses of the government department. What is a development expenditure? Development means the government expenditure for investment purpose. When we see the development word, it means that is investment. Okay, to improve the facilities and the passive physical infrastructures. Example, defense and security, service and general administration. Okay, you can see and you can scroll this example. Okay, data 2013-2014 in the economic report. All right, there is an operating expenditure, and they also give the values of revenue and the development expenditure. And the important thing is, from this, we can know that the budget was surplus, deficit. Okay, we also we always heard about the budget was deficit. What the meaning of budget deficit? Budget deficit means your government expenditure is more than your taxes. Okay, what is a budget surplus? Budget surplus means your revenue or your taxes is more than your government expenditure. All right, this is examples of the components of the government expenditure. You can see government revenue. Okay, types of budget. This is already explained. Okay, we have balanced budget, surplus, and deficit. What is a balance? Balance means G equal to T. Okay, federal government budget. From this pie, you can see the portions of development expenditure, right? Where the government budget go. Huh? This is example for our country, Malaysia. All right. For this topic, actually, we are more stressed, okay, on the topic of fiscal policy and monetary policy. Okay, fiscal policy and monetary policy. All right. When you heard about the fiscal policy, it's mean that the government use the tools only government expenditure and taxes, G and T. Again, okay, again, I repeat, when you see or when you heard about the fiscal policy, it's mean that that is the way of how the government control the economy. The way how the government control the economy. So what the tools? The tools is government expenditure and also the taxes. Only two tools, right? Okay. All right, and then what is the objective of fiscal policy? All right, you can read it. Securing efficient allocations of economic resources, attaining and maintaining full employment, accelerating the rates of economic growth, and controlling the equitable distributions of income and wealth. Okay, for fiscal policy, they also have types of fiscal policy. They have expansionary fiscal policy and contractionary. What is expansionary? Expansionary means the government will increase the public spending and they will reduce the taxes. Expand. Huh? What is a contractionary? Contractionary means the government will increase the taxes and reduce the government spending. So both of these types of fiscal policy, okay, how the government use is based on the situations on what is the current economic condition. I mean, whether it's the inflation or recession. Okay, next. Okay, this is automatic stabilization. Okay, those progressive and proportional tax, transfer payment, price control. Okay, next is a monetary policy. If the fiscal policy only use two tools, okay, what about the monetary policy? Monetary policy means what? A policy employing the central bank. This is what central bank controls. Okay, on what? On the supply of money, our ringgit. Okay, so what is the objective of monetary policy? First, to maintain the domestic price stability. We have to make sure that zero inflation, but this is impossible. There is a certain rate that we have to achieve. Next is to achieve the balance of payment. It means that our export and import, we have to make sure that our export is more than our import, or we can say that it's a balance. To achieve the full employment, we have to make sure that everybody have a work, have a wages, okay? They can live, all right? So next, to achieve a higher economic growth, when the standards of living is very high, the development is there, so automatically our economic growth also influence. Okay, to maintain a continuous low structures of interest rate. Okay, the types of monetary policy also say we have expansionary and contractionary. So expansionary means we have to increase the money. We increase the money supply in the economy. It means that the situation is, the current situation is, our economy is recession. This is what happened now. Okay, government will increase the money supply. Okay, to make sure that we have a money. We have a money to consume. All right. Next is a contractionary. Contractionary if your economy is inflation, and we have to decrease the money supply. Why? Because everybody got a lot of money, but the supply of goods and services was very limited, and finally the price of goods and services was increased. So we have to control the inflation. We have to make sure that it's stabilized. Okay, this is very important. If the fiscal policy, we only use government expenditure and taxes, but in the monetary policy, we have several tools. This is what we call monetary tools. The first one is a liquidity ratio. What is a liquidity ratio? Liquidity ratio is a all depositor institution. What the meaning of all depositor? All depositor means all bank. Okay, they have to require to hold a minimum percentage of deposit as a cash reserve. Okay, to meet of their demand for their customer. Next is a stationary reserve ratio. The legally mandated ratio of reserve to deposit for bank. All this is related with the bank. And the third part is a bank rate and discount rate. The interest rate that central bank charge member bank for loans. Okay, bank rate. And then we have open market operation, OMO. Okay, now if you see the table, so we have money supply increase and money supply decrease. But as I say, money supply increase when the recession happened. We don't have money to spend. So the government should increase the money through the central bank, through all the bank. Okay, so they will use all these tools. Okay, OMO is a market. Okay, buying and selling government security. That is OMO. All right. So, okay, if you see OMO, money supply increase, purchased by the central bank. Okay, if you understand about the security, okay, if the government want you have a money, okay, they will buy the security from you and they will give you the money to spend. Because when you buy on security, okay, it's not play with short-term day, you know, it's a long-term period. Okay, let's say you hold the security for 30 years, for 20 years. Okay, so but if the government want you to have a money, they will buy the security that 30 years, but they give you the money now, not 30 years back. That is what we call OMO. But the situation purchase and sell is depends on the situation, whether it's a recession or inflation. It's also same with the stationary, bank rate, liquidity ratio. Okay, this is a several qualitative instruments.